Today we're going to test one of the best trading strategies in my opinion we are going to actually test on this YouTube channel, because at the end of the day it's a really simple trading strategy. It's not the best because it's really complex, it's the best because it's simple, and for me personally the simple trading strategies are the best ones, and this is just for one reason: confidence. Because basically if we try out a trading strategy that has got loads of different rules, loads of different setups and all this, we are not going to have the same confidence as if we have a simple trading strategy that we just rinse and repeat every single day, and we can actually get a lot better on this simple trading strategy than a complete complex one. But let's check it out, and it's this YouTube video that we can see here. It basically says my favorite trading strategy within 1 minute, and it has a high win rate. I don't know about the high win rate, we'll see that at the end of the video, because obviously we're going to be going through the analytics. And obviously don't forget that down in the description we've got a nice discount coupon for Forex Tester Online, so you can get it for a cheaper price. But let's go ahead and let's see what it is all about. Like I say, I have high hopes for this trading strategy because at the end of the day it's a basic trading strategy and it uses market structure, so these two combinations I think is perfect.
In this video, I'll show you one of my favorite 1-minute trading strategies, the momentum retest strategy. You'll learn how to identify high probability setups, time your entries using candlestick confirmation, and trade successfully in both trending and range-bound markets. Before we get started, here's what you'll learn in this video: how the momentum retest strategy works and the psychology behind every trade setup, the best candlestick confirmation patterns for precise entries, how to trade the strategy in both trending and range-bound markets, how to use the strategy on all financial markets and during all trading sessions. Before we dive into the strategy, you first need to understand market structure. Without understanding how the market moves, it becomes very difficult to consistently make profitable trading decisions.
Yeah, I want to make a small disclaimer, and at the end of the day, if you've traded market structure before, you'll probably resonate with what I'm saying. And it is that the market structure can be quite discretional, okay? Because at the end of the day, there's no way to actually put out a market structure that sort of says, okay, this is an exact market structure point. Sometimes it can be confusing, so at the end of the day, we don't need to take this as that it's always going to be exactly the same. And especially if you haven't traded market structure before, if you're not used to actually reading the market structure, then obviously you need to first learn to understand the market structure, and then understand if the market structure that you've actually learned and if it's the correct one to apply this trading strategy.
The market moves in 3 phases, and in each phase, price reacts differently to key levels. An uptrend is a market condition where buyers are in control. It is characterized by a series of higher highs and higher lows, indicating that demand is greater than supply. During an uptrend, the best trading decision is usually to look for buying opportunities rather than selling opportunities. An uptrend consists of 2 important moves. The impulsive move. This is the principal move of the trend. During this phase, buyers aggressively enter the market and drive prices higher, creating strong bullish momentum. The retracement move. After a strong advance, some buyers begin taking profits. As a result, the market temporarily moves lower. During this phase, many retail traders mistakenly believe that the trend has reversed and start shorting the market. However, in most cases, the retracement is simply a temporary pause before buyers step back in and continue pushing prices higher.
The problem I was saying before the market structure, right now you'll be able to see it really clearly. There's a push, a retracement, a push, a retracement. And you know exactly where the retracement finishes and where it starts to push it up again. But here comes the thing: a lot of times when we actually watch the real markets, we'll be able to see that we might have a push here, a retracement, a push, and then we have a small retracement here, another push here, and we have a mix of big retracements and small retracements, and a lot of times we won't know to identify exactly which is the correct push. A trick that I tend to use for this is to actually look at the push that has created the new high, because here we can find maybe a few different pushes, okay, a few retracements, and some don't manage to actually break this high. So the one that I always tend to take to make it more mechanic is always look at the push that has created the new high, in this case in an uptrend.
Our objective as traders is to avoid getting trapped in these temporary pullbacks and instead focus on catching the impulsive moves. A downtrend is a market condition where
this is exactly the same as an uptrend. I don't think we need to go through this, but I want to show you more or less the entry model, because here is obviously what we're going to be backtesting, and obviously the rest I'll be showing you on the backtest. So let's look at this here. Okay, that's where it starts.
Instead, it starts pulling back, creating a retracement move.
And here's what I want to show you. As you can see, we have this push and we have this small retracement, and then we have another push. and here we have a break of a structure. But depends on how you read the market structure, because you can consider this one push, or you can consider it one retracement and then another push. That's what I meant before with the market structure.
The beginning of this retracement is our resistance level, so let's draw it on the chart. At this point, the market is still below the resistance, so we simply wait and let the price develop. A few candles later, buyers step back into the market and successfully break above the resistance level. This breakout is very important because, according to the principle of role reversal, the old resistance now becomes a new support level. However, instead of buying immediately after the breakout, we remain patient. In most cases, the market comes back to retest the broken level before continuing in the direction of the trend. This retest allows us to enter at a better price while reducing our risk.
Another thing that I want to mention, basically what I was saying before, you can see that we could consider this one massive impulse, or it could be split in two with this impulse, retracement, and impulse. And depending on how we consider it, we could actually not have our entry, or we could, because now, right, if you look at this, we consider this another impulse, and the price came to this level and finally rejected up again. Meanwhile, if we only consider it one push, we'll be waiting for the same thing to happen, but in this case here above.
As you can see, the price retraces back to the new support, and right at this level, a bullish pin bar forms. The long lower wick shows that sellers tried to push the market lower but were quickly rejected by buyers, confirming that the support level is holding. This pin bar becomes our confirmation signal. We place our buy entry at the close of the pin bar candle, set our stop loss just below its low to protect ourselves if the setup fails, and target the next resistance level as our take profit. As you can see, the buyers regain control, the market resumes its bullish momentum, and the price reaches our target. Now let's look at another chart example. This is a downtrending market, which means sellers are in control. As you can see, the market makes a strong, impulsive move to the downside, followed by a small retracement. Here we have a clear support level, so let's draw it on the chart. A few candles later, the market breaks below this support. Once the breakout occurs, the support level becomes a new resistance according to the principle of role reversal. Instead of selling immediately after the breakout, we wait for the market to retrace back to the newly created resistance. This allows us to enter the trade at a better price with a smaller stop loss. As you can see, the market pulls back to the resistance level and gets rejected, forming a bearish pin bar candlestick. This rejection confirms that sellers have regained control of the market. Let's now understand the psychology behind this move.
So it's simple, the strategy, like I say, we're going back to basics, and I love these back to basics because at the end of the day, simple trading strategies for me are always the one that perform the best in live trading. So basically the principle is to find the market structure, and when the market structure breaks its low in terms of its continuing its weight on the downtrend, we just wait for the price to retrace back to this key level and enter with candlestick pattern. In this case, a candlestick pattern will be a pin bar, or it will be an engulfing candle. Good thing is in Forex Tester Online we have these in an automatic way. It will show us on the chart, so it'll be a simple way to do. And this, to resume, is a trading strategy. Then we've got basically the range bound, where basically the price is in range and it finally breaks out to one side, and we wait exactly the same, so actually price to come back down and look for a candlestick pattern and then follow the trend. So let's get into Forex Tester Online. In this case, I am in the GBP against USD, so the pound against the dollar. And what we're going to do is we're going to jump to the 1 minute time frame, because here is where we're actually going to look for our trades. And as you saw, the trading strategy, it's really simple, but at the end of the day, the most important is that the trading strategy is profitable. So I'm going to start off basically on the London time zone, on the London open session, because at the end of the day, we are trading with the pound, so it makes sense to actually use the trading session. And as well, we can roll over to the New York session and we'll be able to see analytics, basically which one is the best. So one thing we need to have clear at the moment is we can see that just now we have a massive market structure breakout, that is this one here. And basically what we are looking now is to find these support and resistance levels. In this case, we have this level here. That, well, I would say if we come back down here, this would be the last market structure that got broke here. So basically we'll be looking at this level here, or we have this level here above. But obviously here we don't have any confirmation, so this trade has it's gone. So right at the moment, what we'll be doing is looking at the most recent high. It'll be this one up here, and the most recent low. that would be this one down here. So we were waiting basically for the price to break through one of these levels like it was just done here, and now we wait for price to retrace to this level. What we're going to do to actually find the candlestick patterns is basically select the engulfing bar here. So when we see an engulfing bar next to our touching our zone, we're going to enter the market, and as well basically our inverted hammer would be this one here, and as well we're going to be including our hanging man. So these are the basically candlestick patterns that we're going to look at, and let's see if we get okay. It has virtually just touched the level. Well, it hasn't touched it, it's just come close to it, and it has given us, I would say, an engulfing pattern, because obviously it's engulfing the actual candle, but I don't think it would be a valid entry. So let's see if we get anything else. Okay, the price is literally just broken above, and as well, as you mentioned before, there's different ways of looking at the market structure. Right at the moment, we could consider that all this is one push, or we can see here one push, a retracement, and one push. In my case, what I'm always going to look at is this one here, because this is how I look at the market structure, but anybody can see it in a different way. In this case, I'm going to add this level here, so we have a breakout of this market structure, and now we'll be looking for the price to pull back, and here we have our pin bar. So this would be actually our entry confirmation, and basically we are going to be targeting for this high, because this is the actual market structure that we actually trading with. So this is going to be the high that we're going to be looking for. So basically I'm going to add a buy with the stop loss below this candle, and the take profit is going to be right up here. So it's going to be a risk reward more or less of a 1-to-1. So that is completely fine. The only downside on this, we're on the 1 minute time frame, and sometimes in the pound against the dollar, we can actually find that our trades are going to be quite small. In this case, it's virtually 2 pips of stop loss and 2 pips of take profit. So obviously this is a downside that we must take in consideration. And this is what we must think as well. It's not a strategy that we can just pick up and trade on the go. We need to have practice, and we need to get confidence while we are trading. And the only way to get confidence in trading is basically, first of all, backtesting. So we get some metrics, we get some results, and we can actually believe in these results, and then obviously trying it out in a demo account to actually make sure that we can trade it ourselves and feel comfortable by doing it. In this case, we've taken the first stop loss, and this is completely fine, that's no problem. And now basically we can still see that this level here is the high that we got right at the moment, and our low is sitting down here. So basically we're waiting for the price to continue higher, and now we're going to look for basically a retracement. In this case, it's gone really far away, and it's created a new market low, that is this one here. So basically now we are waiting for the price that actually broke through this level here. So basically this would be the level that we're targeting to actually enter, but we can see the price is going even higher, massive push today, and now it's happening exactly the same. We had the price come down and push higher, and there we can see basically the price came up and came back into our zone, but in this case we haven't got any type of confirmation. So we just need to wait for the price to push any higher. In this case it's broken the market structure. As you can see, it came up here, came down, came up again, broke this market structure level. So basically now we'll be looking at this level down here to basically enter our trade. So it would be something like that. Let's see if we get any. Okay, there we go. Then we've got actually our shooting star. It's not showing as on the actual chart with the arrow, because it's not as small, but I consider this a pin bar. So I'll be entering our sell position here, placing a stop loss above again, and the take profit in this case is coming down here. Again, you can see that the actual take profit and stop loss in terms of pips are quite small. The stop loss is 2.3 pips, and the take profit is a risk reward 1 to 2 with 5.1 pips. So it's not big, but in any case, it's a valid trade. And as well, we can see we actually managed to get to a risk reward of 1 to 1. So it's always a good idea to have some type of protection in terms of break even, or rolling your stop loss down to maybe halfway through, or even taking partials. At the end of the day, this is a risk management that everybody should think about themselves, because some people feel more comfortable with a break even, some people feel more comfortable with taking some partials. In any case, we can see that right now we are in a downtrend, so we are waiting to break this low for another entry opportunity. And on top of that as well, we have this high here that if it gets broken, we could actually search for some entries up there. But another thing that I really enjoy of this trading strategy is that it gives you a lot of trades, because at the end of the day, we're in the 1 minute chart and we're playing with the market structure. So this is always going to be really interesting, because we've got a lot of opportunities and we can select only the best. Obviously in the backtest, I'm going to select all the opportunities that I can find, because that way I can gain experience with each setup, with each market conditions, and that way I can improve my confidence with every trade I take in the future. But in any case, if we once we've done this first backtest, then obviously we must think about refining the strategy and not taking every trade and just taking my best trading setups in terms of when at certain market hours, like just after the opening or just before the closing, or any type of things that we can add on to actually do a better trading plan and not just taking every single trade. But as we can see here, basically we have broken this low here. The price came back to it, but it didn't give us any type of confirmation. So the only thing we need to do now is place our level down here, and as well place the level here above that is actually the high that created this new low. And let's see wherever we get the breakout. In this case, we got another breakout here. So basically we can need to update our levels and bring it down here and bring this level up to here. And as you can see, let's see, right in the moment we didn't get any confirmation with this candle there. So basically it's breaking now the high. So basically we are updating the level here above. Let's see if we get a break up any lower. It came back to the low again. It's taking a lot of doing a lot of liquidity sweeps, to be honest. And now basically we can see that here we have it's a big down push, but as well it's a choppy down push. So as well we can see some market structure levels here, another one, a small one here. And here's where we've got to be careful, because at the end of the day it can give us some mislead or misinformation in terms of if we don't mark out correctly the market structure, then this could give us some losses as well. In any case, let's see if we find anything happening here. Right at the moment we are looking for the price to actually give us a confirmation there. Right at the moment it's not giving us any confirmation, and we can see a confirmation happening right here. We have got this pin bar. So basically we are going to enter the trade, placing the stop loss again above, and the take profit right here at the bottom, sitting just a bit above this one-to-one risk reward as well. You can see that the pips are really small in terms of the stop loss size, 1.8 pips. It's not really big, and here maybe it'd be a good idea to maybe move to a 5-minute time frame or even a 50-minute time frame to actually have a bigger stop loss and have a bit more movement, because at the end of the day the price at any moment can slap our stop loss, as it's not very big. In this case it did hit the take profit, but the spread must have opened just when it hit our actual take profit. So in any case, if it is a loss, I still count it as actually a take profit, because I did place the actual take profit just a bit below. But as we are live trading, I'm not going to correct it on the go, because that would just be faking the backtest, and it's something that a lot of people do, and it's not a good idea, because at the end of the day we're just going to get fake results. So it's something that we need to learn from, and next time I'll place the take profit a correct way. But what we need to do now is update our levels, because basically we can see that the market structure has squeezed into here, and now it's making this breakout here above. So we could see, okay, shame it's not an engulfing. Now we do have our pin bar that basically we could enter here, but at the end of the day, if we look at the distance of the stop loss, it would be so small that it doesn't make much sense. So we're looking at this stop loss would be literally 1 pip. So at the end of the day, that for me, it doesn't make too much sense placing 1 pip of stop loss. So we're gonna avoid this trade, and we'll see. This one would have been a take profit, as you can see, and it doesn't mean I'm avoiding it because it's a bad setup. It's just with a so small take profits and stop loss, it doesn't make much sense for me. So at the end of the day, I prefer to do it with a bigger size stop loss and take profit. And as well, on top of that, I think this would be more profitable, or at least better in terms of commissions, if we do it in a 5-minute time frame. But this is just my personal opinion. At the end of the day, you don't need to be think the same as me, but personally I think it would be better like that. So let's update our levels, plate this up here, and let's see if we get any breakout on the top. Okay, we've got a breakout on the bottom, and the price has come, I mean, we consider this a pattern, but it actually didn't touch the level. So now it has, but it broke completely through. But now we do have an engulfing candle, and this setup seems quite promising, especially as well because we are actually in a downtrend. So it could be quite interesting, this trade. So let's open our sell position, placing a stop loss here a bit above. Now it's look more like a 3 pip stop loss. I mean, I'm still not happy with it. At the end of the day, a two pips take profit. I mean, for me, it's ridiculous, these sizes, and I don't think it's the best idea. But again, it's a trading strategy that we can refine and we can work on. So at the end of the day, we can sort of sit with a sweet spot between X amount of pips. And as well, especially if we actually bring this to a higher time frame, I think it will be quite beneficial. As well, let's come down here and let's update this to this level there. So let's see if we get that's a shame we actually didn't get this engulfing candle. So right now it's breaking this high. So right at the moment we are looking now to have a bounce off this level. So let's see if we get, okay, there we've got our engulfing candle just coming out here. And as you can see now, we don't have room for our take profit. So right now, personally, what I would do is basically place the take profit with a risk reward of 1-to-1, because at the end of the day, I don't think I would risk going any higher than that, because I don't have any guarantees. I never have guarantees that it's going to go to the last high or the last low. But especially being in this downtrend, I don't know if it will get, I mean, it can take liquidity off here. It looks like it's done exactly what I thought, and perfectly it finally continued up, so we could have had a bigger risk reward. But at the end of the day, we don't know if it's actually going to get to that take profit. So at the end of the day, I prefer to take a risk reward 1-to-1. I think that's the best way of doing it, in my personal opinion. But in any case, what we have to do now is update our levels up here and bring this one down to this level there, and see if we get any more breakouts. As you can see, we haven't even been through half of the day and we've had already quite a lot of trades. This is always a good sign of a trading strategy, that if we get a lot of opportunities, then we can just select the best ones. And that way we got more opportunities to be profitable in the market. So now basically we can see a market structure that has been broken. It's taken this level out here. So basically now this is the new high. And this level here is the level that we're actually going to be looking to trade. That finally it doesn't, because it didn't give us any confirmation. And it's broken high now here above. So now we're sitting on the high and low of this candle, and we just need to see if we get any confirmations on the inside. As well, we could see that this level here, basically we could have had the confirmation here, but this was just a doji candle, so we're not getting anything interesting here. And we could actually leave this level here just to see if we get, now we get a good confirmation there. So let's enter the buy position here, and again, 2 pips of stop loss. I'm bringing it a bit farther away down, because at the end of the day it just makes sense for me to do that, because like I say, going below 2 pips take profit and stop loss, it's a bit silly for me in terms of if we're in the 1 minute and we're paying commissions for every trade. At the end of the day, our trading cost is going to be higher, and I don't think that is the best idea. But in any case, we just have to continue with the backtest. But at the end, but now, just by seeing what I'm seeing, I could say that trading this in a higher time frame, I think it is more optimal and beneficial for the trading strategy, to be honest. As well, we can see that we nearly had a confirmation here. We've got an engulfing candle, but it didn't manage to touch the actual level, so we're still waiting for the price to actually bounce off this level. As well, if the price would bounce now, I don't know if it would be the best idea to take it, because at the end of the day, prices doesn't have to come to this level to actually continue higher. It could just come close the positions that they needs to close, and then go higher, and then this level becomes completely irrelevant. So saying this, we need to update our levels now, because the price has gone higher, and we're going to be sitting here above. So we're going to update this one as low here, and let's see if we get any confirmation. In this case, we double. It's not the confirmation candle that we're looking for. It's not a bad one. I could trade this without any problem, but it's not exactly the one that we're looking for, so we're not going to take it. So let's see if we get anything more happening here. We can see a market structure break. So now we're looking basically at this level there, and this is the high. Let's see if we get any pullback to this level. Okay, looking good. Well, it's not an engulfing candle, so we can't take that trade there. It's just about to break the market structure here above. So let's see what happens. It looks like it could take liquidity. It's taking the liquidity from above. So now we're looking to bounce off this level. In this case, we don't get any trade there. Now it's continued down basically, and this would be the level here that we are looking for this retracement to happen and maybe enter the market at this level here. Perfect. I like this candle. I can take this. So let's place a stop loss just here above, 2.8 pips. So again, it's not very big, but in this case, we do have a high risk reward. This is quite interesting because just now we are in minus 5%, and this 3.5% could come in quite handy, but obviously it took the stop loss. So hey, that's no problem. Shit happens, and we get another entry at the same spot here, so it's a valid entry, so we can enter it again, this time with a 5 pip stop loss. So it makes a bit more sense, and in this case this risk reward is ending up in a risk reward of 1 to 2. So in any case, that is not bad at all. We could recover the losers from the previous trade, and there we go, nice trade happened there. And this is the idyllic setup, to be honest, where we get all the market structure aligned. But obviously this doesn't happen always, and this is where we need to sit down now and look at this trade and say, okay, when does this trade happen? It looks idyllic, it looks nice, It did exactly what we wanted to do. What happened previously? What do the time frames look like? Is there any indicator that I can use to actually filter this type of entries? And that's how we actually build a better trading plan for the trading strategy. In any case, what we're going to do is continue testing the strategy out. Right now we have this push here, so it's coming below. So it's a really small market structure. A lot of people maybe not appreciate it, but I do actually consider it a market structure. So there we go with this engulfing candle, so we can actually enter a trade right at this low. It's a valid setup if we take it in terms of a mechanical strategy, but if we actually look at the market, we'll be able to see that maybe it's not the best idea. Obviously, we're going to take every single trade just to actually have it all metrified, but honestly, all the setups aren't going to be valid, and that's what we got to keep in mind. As you can see, in this case I was wrong, and by looking at this, I saw it was going to retrace up and it didn't. And this is why we need to backtest all the setups, because at the end of the day, we never know when we are going to be right or wrong until we don't have enough experience with this trading strategy. Obviously, this is not my trading strategy, so I don't know exactly when things like that are going to happen. With mine, I know it exactly every single day, but with a new one, we need to practice, we need to backtest, and we need to understand and learn and get experience with the trading strategy. So let's see how this one performs here. Okay. We haven't got the entry yet, and it looks like we're not going to get any entry, because yeah, we could actually look at this. We do have an engulfing candle happening here, but it's already happening after we got the first pullback, so it could be a valid trade. But on the other side, we need to double check and see it would have hit a take profit, because the stop loss would have been here above. At the end of the day, the stop loss would have been quite small, but like I say, we need to actually do this again and over and over again. This would be a 1.8 stop loss, more or less. So it would have hit a take profit, but we need to actually say, okay, is this a valid trade? How many times did it happen? We need to take a screenshot of this. Basically, we can do this with our with the journaling. Take a screenshot, add the notes that we need to add. This happened here. It first pushed in, it came back down. Then when it tried to push again, I got this confirmation, and the trade went to take profit. We've got to see how many times this happens, and then we can actually see if this setup is a valid setup. In any case, we're going to see the next one that is here below, and this one is here just above. No, sorry, there's this level there. Let's see if we get any confirmation happening here. It doesn't like we do, and the price, it seems like it's going to go any lower. Could be. Same happened here, as you can see, just the same as before. Price approached the level, came back down, gave us a confirmation with this candle here, and then we got this massive candle that would have taken out our position. So that's why we've got to make sure that these sort of type of trades are really valid and they're just not a lucky one-off. So let's see right at the moment with the market structure. This is the low and this is the high. Let's see if we get any breakouts and any more trade setups. We can see this one happening here. Price broke above and came back below it slightly. It hasn't really had a massive breakout, so I wouldn't consider this really a breakout. I would prefer some more confirmation, but you can see that this trade as well developed quite well. Based on that, I don't trade this trading strategy myself, so I don't know exactly how it works on the pound against the dollar, because it works different on different assets. On gold, maybe I can find different type of setups with different contexts of the market, and they can work better. And then if I bring it to the euro against the dollar, then it work different. So this is why we need to backtest everyone on each asset and see on what asset it works better, where we feel more comfortable, and all this. And obviously, I won't overextend this too much, because at the end of the day, the results I can get on this trading strategy doesn't reflect the results that you can get, because depending on what type of person you are, this can be better or not. But we can actually look at the exit optimizer. If we would have brought the stop loss to 4.6 pips and disabled the take profit with a max holding time of 28 minutes, this losing trading strategy that I've been backtesting with a minus 3.8% would have come to a 2,400%. Obviously here we're having a bigger stop loss, so it makes sense, and it could have been a profitable backtest. Obviously it's only 9 trades, so we don't need to go crazy on it, but I think it's a good idea. It's a good base to actually work on and build our own trading plan, to actually have our own trading strategy, because at the end of the day, every trading strategy that you see on the internet, on this channel, on any channel, you got to backtest it yourself and bring it to your scenario and bring it to your comfort zone, so you actually feel comfortable and have confidence with the strategy. So said this, I hope you've enjoyed the video, and don't forget, my name is Jack. Don't forget the massive discount coupon that you got down below, and I'll see you next time.